Break this down further, we're joined by Mohan Yellishetty, Professor of Critical Minerals and Resources Management at Monash University. Welcome back to the programme, Professor. Now, gold is currently above $5,500 and silver is going vertical. So are we watching a rational safety trade, or is this starting to look a bit more like a frenzy?
Absolutely. Like, as you can see, as you rightly framed it again, so there are so many conflicts, there are so many uncertainties, and the tariffs and U.S. claiming Greenland and planning to attack Iran. All of them have got a bearing on the current rally of people are trying to, because that's a metal that most people tend to kind of invest when in situations where we are currently kind of going through a lot of uncertainties. So again, the silver, because when gold is unaffordable, probably people are also betting on silver, not as a proxy, but silver also is rallying because of industrial consumption as electric vehicles and electrification and number of those electronic demand is kind of pushing the silver prices up. So yeah, it is a multitude of effect that is kind of leading to the situation that we are currently in.
Right, and silver is rising even faster than gold, up 60% in just 4 weeks. Does that tell us that investors are confident or just chasing the cheaper metal because they missed the gold rally?
Yeah, as you can see, for example, electric vehicles and solar panels and electric, number of those high-tech clean energy industries are, the demand is growing. So that is kind of telling why silver is kind of, the silver price is going up. So that means people are more confident in kind of investing in more industrially industrially more demanding kind of metal, in this particular silver.
Now, central banks are buying gold at record levels. Should we read that as a quiet vote of no confidence in paper currencies?
Yeah, absolutely. As people say that you can print currency, but you can't print gold. So gold has people always kind of took a refuge in gold because, as you can see, like everything else can get inflated or everything else can be manipulated, but not gold, as gold has to be mined, processed, and held by the central reserves. So even if you look at 2025 itself, China, Poland, and Brazil have kind of bought in nearly 650 tons of gold. That is half of the world gold production. So yes, people are resorting to more stable kind of reserves compared to especially the central reserves than the US dollar, which is also going through a lot of kind of inflation and uncertainty because of so many other factors that are contributing to that.
Right, a lot to wait and see there. Professor Mohan Yellishetty from Monash University, thank you very much for your analysis.
My pleasure. Thank you.